If you're hunting for the next crypto gem that could multiply your portfolio, PYTH Network is making serious moves against giants like Chainlink. Imagine an oracle that's a service feeding real-world data like stock prices into blockchains. That's securing billions while its token hovers at just 11 cents. With market cap at $680 million versus Chainlink's $17 billion, the upside looks huge. Recent stats show PYTH handling over $1.7 trillion in traded volume, powering 285 protocols, and rolling out game-changing features like tokenized gold feeds and cost-slashing tech. But is the chart signaling a breakout or a pullback? We'll dissect the news, my trade setup, and why I'm already positioned. Stay tuned, this could change your game. Looking at the landscape from DeFiLlama, Chainlink leads with 68% of total value secured at $90 billion across 454 protocols. But PYTH sits third, securing $7 billion on 285 protocols. That's 5.8% share, ahead of names like Redstone. Switch to CoinGecko's top oracles by market cap, and PYTH ranks second at $680 million, behind Chainlink, but miles above API-3 at $196 million, or UMA at $127 million. This gap is an opportunity. PYTH is catching up fast in a space where reliable data is king. PYTH July Momentum Report paints a picture of non-stop progress. Total traded volume hit $1.7 trillion, up 5%, with monthly volume at $94 billion. Cross-chain updates surged to 89 million, a 10% jump, and entropy requests, that's random number generation for fair apps, reached 6.9 million, up 16%. Oracle integrity staking climbed to 946 million, securing the network. They added 2 new blockchains, now dominating 95% of addressed markets on Aptos, Suri, and Solana. Plus, 17 fresh integrations. PYTH is bridging traditional finance with crypto. Take their new price feed for XAUM, a tokenized gold asset from Matrix stock on Sui network. It's live, letting you trade gold bars on-chain with real-time pricing. Then there's the partnership with Theo for robust RWA data, real-world assets like tokenized bills. Builders can now integrate TH-Bill via PYTH, powering Theo's full-stack tokenization with accurate feeds. This means more trust in on-chain assets, drawing in big players who demand precision. PYTH is upgrading DeFi efficiency. They're supercharging drift protocols AMMs with laser tech. Majors like Bitcoin, Ethereum, Solana update every slot, others refresh pre-trade, slashing gas costs by 90%. It's faster, cheaper, sharper trading. Their Express Relay feels like a centralized exchange, but with DeFi freedom. Launch quicker, cut MEV. That's exploitable value miners grab, like sneaky front-running, and keep more earnings. Access top searchers for competitive prices and fast fills without middlemen or manipulation. And they're adding more assets and symbols, positioning PYTH as the universal price layer for global markets. As Mike Cahill says, it's the DeFi home for institutional finance. Every major trading firm, Revolut, exchanges like CBOE, LMAX, and big crypto spots use it. Over 120 publishers contribute data, with more coming. This adoption from heavyweights builds massive credibility. Technically, PYTH 3-day chart shows promise despite dips. I anchored Fibonacci from December 2024 high to June lows. Levels at 20 cents, 26, 37, 55, 84 cents, and $1.30. My take profits, trimming positions as we hit them. Price broke the short descending trend line from December, testing it as support now around 11 cents. But it's battling the 10 and 21 EMAs after rejection close to the 55 EMA. Fibonacci RSI indicator nears bearish, but neutral. Volume profiles control point at 14 cents. My buy zone is 9 to 12 cents. So still a solid entry. Invalidation below 8 cents weekly close. Trail stops on gains. I'm in long term, believing in PYTH fundamentals. In my opinion, they are building something real, with growth that could reward patient holders big. If this resonated, hit that like button, comment your thoughts on oracles, PYTH, Chainlink, or both, and subscribe for more daily insights. Check my previous PYTH videos linked in your screen. Never financial advice. See you tomorrow.